Welcome to Common Sense Investing. My name is Cameron and I am a microcap investor. And that means that my investing style tends to not follow the crowd. I am looking for good, growing, tiny, profitable companies. But even beyond that, I'm looking for companies that are undervalued for non-business reasons. I'm looking for cyclical companies at a downturn, or maybe an unknown company at an inflection point. Today, I'm going to introduce you to two stocks that have been surrounded by negativity recently. I'm going to show you why. I'm hoping to start the discussion of whether these stocks are simply bad investments or whether this is truly a be greedy when others are fearful opportunity. The first stock, the first company I'd like to introduce is ADF Group. ADF Group is a North American leader in complex and heavy build-up steel structures, and for some people this is boring. It's not a crazy high 80% margin AI business that might go boom or bust in the next 6 months. But for me, I find it fascinating the structures this company is building with steel at a scale that we have never seen before. Because of their investment in a top-of-the-line robotics upgrade in their main facility, ADF Group is producing more product at higher margins than ever before. I introduced ADF Group at around $6.50 per share Canadian, and ADF Group rewarded me handsomely with margins up, backlog up, revenue up, net income up significantly, and the cash flow you could drool over. When adjusted EBITDA doubles and your share count doesn't go up 1 share, that's probably a company I want to own. And that reflected in the share price from my introductory video on ADF Group all the way up to above $20. People were rightfully celebrating. However, in the microcap space, sometimes it's tough to just fall asleep on your money. Times change, investor sentiment changes, and for some reason, it's been a declining share price and investor negativity on ADF Group. What happened? Well, it started with insiders, management of the company, the Pacini's, buying back their own shares to make some money and then canceling those shares for the company. At the time, it wasn't a bad deal because essentially insiders management get rewarded for all their work over the years and the company is canceling these shares. So share count will get reduced. In theory, shareholders will get more value per share. The problem is it didn't stop there. Marshall Barwick, who owned at one point over 10% of ADF Group, also came out and said, hey, we're going to be selling some shares too. And for the past 4 months, this is all we have seen. Large sale after large sale after large sale. A staggering amount of ADF Group share volume just being sold at any price as the price continues to decline day after day, week after week, month after month. To the point where it got here, all the way from $20.50 Canadian in June down to $9.30. So what happened in that time fundamentally with the company? Did something happen that was just they started losing money? Did they lose a big contract? No, not really. I mean, I encourage you to go look at Keystone Financial's video. I will link to that down below in the pinned comment. Basically, the argument right now, the bearish argument for ADF Group is their backlog has been declining. As you noted before, they had a backlog of about $510 million. That backlog, as of reported right now, is about $402 million. So this is concerning because this is called a cyclical company, and are they on a down cycle? People are not willing to pay more for a company that's going to start trending down in their cycles. The problem with that is while there is some evidence that they are starting to cycle down, I mean, net income's up 52%. So, I mean, is this doubling again? Does anybody expect that EBITDA is going to double again from last year to this year? Probably not, but we're still looking at numbers like up 52%, up 13%, earnings per share up to 51 cents from 32 cents. There's still some indications that this company is not cycling down, but it's growing. Now, revenue was down 6.6% in this most recent quarter, but the company did explain that this was a client day due to construction site preparation, and this $35 million wasn't going away, it was just postponed. So while these numbers aren't showing that the company is going to double everything again this year, and there is concerns at the backlog, I have to wonder, what if? What if these share sales are due to a non-business related issue, and Marshall Barwick and some other large investors just want some capital gains? What if ADF Group is going to continue to be lumpy, but that lumpiness is still going to continue up in the future? Because when I look at their past 10 or 11 years of revenue and earnings, I'm not sure that I see a cyclical stock here. I'm seeing a small growing company with some lumpiness. I am seeing periods where they bench up in growth, they kind of stay at that growth level for 4 years, 3, 4 years, as they reinvest in themselves, and then they bench up to the next level. So we see this time and time again, where we now actually have what? 1, 2, 3, we're on the fourth cycle so far of ADF Group doing this. I'm not sure that people expecting a massive cycle down are really supported in this by the history of ADF Group. I think the big question here is ADF Group a $20 stock on its way up and continuing to grow? Or is ADF Group a $9 stock because it's already at the top of its cycle and yeah, we're going to get a few years of decline? That's really up to you and what you think, but I think that ADF Group is at least worth putting on your watch list and doing some research. This is not financial advice. I'm not a financial advisor. I'm definitely not your financial advisor. The intention of these videos is to give information and hopefully start a conversation. This is simply how I invest and not to invest. I expect after this video, if you're interested in either of these stocks, to go research them on your own. And I have a Patreon Discord. So if you'd like to continue researching these companies with me and around 170 other people, I'll link to that down below in the pinned comment. The second company, the second stock I'd like to highlight, and really this is in no specific order, Atlas Engineered Products. Atlas Engineered Products engineers, builds, and ships roof trusses and roof systems to home builders that are building the houses that we so desperately need. The benefit of Atlas is these are prefabricated pieces of housing. So for home builders that need to build houses quickly, cheaply, safely, this is a fantastic option. And Atlas has been quickly expanding their presence across Canada, as well as agreements to enter and sell into the United States. It's a good company with a history of excellent growth in a good industry sector. So what's the problem? Well, it's the industry sector, right? I mean, Canada is in desperate need of housing. Everybody in Canada knows that. Housing costs have skyrocketed. They're unaffordable. To bring the costs down, we need more supply to reduce the demand, right? The problem is with rising interest rates and more difficult access to capital, home builders simply haven't had the money to continue building that supply. So while everybody knows that housing starts at some point need to go up massively, it's just not happening. And next month becomes the next month, the next month becomes the next year, and everybody's still waiting for that to occur. So the problem with Atlas Engineered Products, and I've been talking about this for probably over a year now, is that as share price was going up, people were willing to pay more for declining growth. That did not make a lot of sense to me. So yes, this guy was confused as I watch Atlas Engineered share price continue to go up, 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 up all this early part of the year, all the way to $1.70. Again, people willing to pay more for declining numbers. However, since that time, as you can see, down, 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 $1.21, $1.22, as low as $1.19 today. So look, maybe I'm the crazy one here, but as the share price of Atlas Engineered Products goes down, I'm getting more excited. What if these mixed trends start to turn into bullish trends as interest rates drop, as maybe Canada gets a new government next year? What if the valuation switches, where I think people were paying too much and getting too little? What if in the future this is a cheap looking stock with a lot of potential? So again, what do you think? How much patience do we need with ADF Group? How much patience do we need with Atlas Engineered Products? Where are they going to be 1 year from now, 3 years from now, 5 years from now? Are you investing in these companies? Let me know down below in the comments. I'd love to hear from you. You've been watching Common Sense Investing. As always, thank you for your time.